When you zoom out, Bitcoin is just retesting where it broke out from. That's it, guys. It's hardly a big deal. When we look at the RSI of Bitcoin, it's like the second most oversold it's been in this entire cycle. These are opportunities. When it gets this oversold, yes, it can chop around a bit at those lows, might even make a new low, might chop, rally, new low, which will then diverge on the RSI. But it's telling you 1 month from now, prices will start climbing. For sure, they'll be higher than here.
Corrections are a normal part of every bull run, and right now, Bitcoin is simply resetting before its next climb. This is the latest forecast from Raoul Pal, CEO of Real Vision. The past week has been a roller coaster for crypto investors. Bitcoin took a significant hit, altcoins were badly affected, and over $1 billion in leveraged trades were wiped out in just a few days. When the market moves like this, fear quickly sets in, and people begin to wonder if the bull run is over, if we've already peaked, or if this is just another cycle playing out. However, Raoul Pal suggests that this volatility isn't unusual. Every bull market experiences pullbacks, and according to him, this is just a temporary dip, not the end of the run. When you look at the bigger picture, everything still points to a major rally in the coming month. His confidence stems from observing global liquidity, essentially, how much money is circulating in the economy. Unlike traditional markets, crypto doesn't rely on earnings reports or balance sheets. It moves based on the amount of extra money available. With liquidity growing, we're set for another big upward move. Stick around till the end of the video to hear Raoul Pal explain why Bitcoin's recent dip could set the stage for a strong rebound. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
The chart that everybody knows about. This is the chart Julian and I came up with, global M2 in dollars with a 10-week lead over Bitcoin. Now, we were not sure whether it was going to follow this exactly because we had an identical setup in global M2 in 2017 in the last Trump cycle. And what happened is crypto collapsed 35% in a week and then slowly recovered with chop. I wasn't sure whether we were going to have the full sell-off to follow this pattern or we were going to go sideways over the period. We eventually went sideways first and then had the sell-off. Either way, it's on track exactly as global M2. What it's saying to you is that financial conditions that tightened last year due to the dollar rallying in anticipation of Trump and also rates going up in anticipation of tariffs, well, that is what's playing through now. Now, if you look at the chart going forwards, that reverses. Yes, there's going to be a period of chop. We're going to be finding the lows around here, and I'll come more on that in a sec. Then there's a period of chop, and then we start coming back up the other side. So it's nothing to concern yourselves with. Volatility is part of the game. Without the volatility on the downside, you don't get the 150% returns or more on the upside. So anyway, calm down, have patience, let this play out. So financial conditions are kind of the big daddy of all of this. And the 3-month and 3-month rates of change of Bitcoin is driven by financial conditions, which leads by 3 months. So financial conditions obviously tightened because of the dollar and rates back in last year. Now Bitcoin has fully priced that in. So we're at the price point that is right. Now, could it then chop around along the bottom until it starts mirroring the rally in financial conditions? Possibly. This is also obviously very similar to the global M2 chart because they're all highly correlated. I just want to show it to you in a different way. The next chart is what you're hearing a lot of noise about is there's an economic weakness coming. Economic data's coming out weak. Yes, it is. And it's been driven by the dollar last year. Again, there is a lead here, and the dollar strength last year is causing economic weakness. This is the reason everybody wants a weaker dollar. China wants a weaker dollar so they can stimulate. They're desperate to stimulate. The world has a lot of dollar debts. They need a weaker dollar to service those debts. The US needs a weaker dollar to export goods. The global economy needs a weaker dollar. But first, we're going to see that that weakening of the US economy because of what happened last year in the dollar. And then things will start to change again and the economic cycle will pick up. Now, that probably also means that rates will come lower because economic data is weaker. So that's playing into our idea that financial conditions are going to ease over time. So it's yet building a more positive case. No, it's not going to be a recession. All of that talk is nonsense. Economic data will weaken for a bit and then strengthen. But this is all good for us. Yes, tech stocks are slightly worried about weaker growth. But again, when we can look forwards, using the analysis, we can see recovery is round the corner. Now, when we look at last time around in 2017 when Trump came in, we saw a very similar thing. Economic surprises fell off a cliff because the dollar had strengthened in anticipation of Trump coming into office. That then eventually reversed and the economic cycle picked up massively and the dollar weakened hugely. And that drove what was a very large crypto and risk cycle, even though the Fed were raising rates. You see, global financial conditions are the key thing here. And that could be driven by the US, or it could be driven by China, or it could be driven by Europe. It could be any of these economic powers, or it could be all of them. So as the dollar weakens, we're already seeing that mechanisms like dollar yen are starting to move a lot more. Now, dollar yen is incredibly important because the Japanese banking system is the heart of the Eurodollar system. They're the ones who lend out dollars into the global economy, and that finds itself its backdoor into China that allows China to service its dollar debts. And if the dollar is weaker, then China can weaken its currency. It can then stimulate more aggressively. It needs to do trillions of dollars of QE to service the bankrupt real estate sector and other parts of the non-performing loan sector. So anyway, that's all to come. If we look at the dollar now versus then, very similar. Trump back then said the dollar is too strong. They've already talked about it, him and Scott Bessent. They've already talked about the long end of rates. What they want is the dollar to, first they will use the dollar as a bargaining tool with the Chinese, the Europeans, the Canadians, the Mexicans to get the tariffs in place. In exchange, they will give a weaker dollar. That helps everybody out. We can all then move forwards with the global economy, and the global economy should be strong. The back end of rates, which is like 10-year rates and stuff, well, that's going to help you guys too, because your mortgages will come down and borrowings for corporations will come down, and that gives everybody more money and that stimulates economic growth. This is all to come. They've made it very clear that that's what they want to do. Global M2 back in 2017, exactly following this cycle. Same kind of administration with the same tariff policies. Dollar reacted the same, the markets reacted the same. So again, don't expect these to be perfection, but expect this to start playing out again. If this is the case, then M2 is going to keep going up all fucking year. If that is the case, then crypto and risk assets like tech will do well all year. Again, don't expect perfection. It won't be exact, but it'll be close enough. I don't see any reason why that won't be the case. And anybody telling you otherwise is just plucking stories. We do the analysis, lots and lots of it. We have hundreds upon hundreds, maybe thousands of charts on all of this.
Raoul Pal has highlighted a strong correlation between Bitcoin's price movements and the global M2 money supply, a key indicator of global liquidity. His research shows that when the M2 money supply expands or contracts, Bitcoin's price typically follows about 10 weeks later. Simply put, when there is more money circulating in the financial system, Bitcoin tends to rise a couple of months later, and when liquidity tightens, Bitcoin struggles. Back in November 2024, Pal noted that Bitcoin had entered a parabolic phase based on this M2 liquidity trend. His models predicted a local top of over $110,000 by January 2025, followed by a correction below $70,000, and that prediction played out almost exactly. This is why he isn't worried about the recent dip. In his latest update, Pal explains why he believes the worst of the correction is over. Based on his analysis, Bitcoin is set to bounce back in the coming days, with prices likely to recover significantly. If his models continue to hold, this recent pullback could just be setting up for the next major rally. Now, let's hear more from Raoul Pal for further insights.
Another way of looking at it is global M2, it kind of consolidates for periods of time. Those periods of time tend to be crypto winter and then crypto spring. as we start transitioning into summer, you get this breakout in M2 and then a retest. We've had the breakout and retest, and what happens is, after that retest, that tends to be phase one correction of the banana zone. We started the banana zone in September, October, November. Then we start correcting. We continue to correct, and then we take off again. That's all to play for. It's very normal. It's playing out like a very typical cycle. The other thing that drives all of this is the business cycle. See, the business cycle is driven by financial conditions, liquidity, all of those things. But this is how businesses do when financial conditions get easier. The ISM survey above 50 shows the economy is starting to grow. Now, economic growth has been strong, but that's been driven by the government sector. But again, Trump and Bessent have said they really want the private sector to take over. So what they're telling you is they want the ISM to go up. They want the private sector to start expanding, regular businesses. And regular businesses expanding also drive Bitcoin. So Bitcoin goes up as the ISM goes up. So this kind of rate of change of Bitcoin will give us much higher prices if the ISM gets up to its normal cycle peak of somewhere between 56 and 65. And that will give us the magnitude of the rise in Bitcoin. We don't yet have a full handle on how high the ISM will go this cycle, but if it goes above 60, I mean, those are high prices in Bitcoin. That's above 300,000, maybe even higher. Now, again, I don't use forecasts because you guys don't deserve them, because you use them against me and say, well, you predicted that. I'm not predicting. What we're trying to do is give you contextualization of how the market can evolve so you can play along from home. Rising ISM will be good for your bags. And rising ISM it may still be choppy because we're still coming through. We need rates to go lower. But as that happens, we will see this pick up. Forward-looking indicators of ISM, like ISM new orders, less inventories, leads by 3 months. It's going up very sharply. Again, expected to be choppy, but it's telling us ISM should be going up. So that's good for Bitcoin in the future. 3 months' time, Bitcoin should be much higher. Okay, great. It's starting to get this now. The ISM also says, well, when that starts coming above 50, what happens is altcoins tend to outperform. Now, there's all this bullshit online. There's going to be no altcoin season. It's never going to happen. It's only a Bitcoin only season. It's all about the ETFs, blah, 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 blah. Simply, probably not true. Again, we deal in a world of probabilities and no certainties, but probabilistically speaking, as the business cycle accelerates, people go further out the risk curve because they have more money. You're earning more money. Your mortgage has gone down. You have higher savings, you can recycle them into assets. It happens at corporate level too, as corporate earnings go up and the overvaluation that people are scared about of the stock market, well, that all becomes noise as well because earnings expand. And then those earnings get recycled into investments and the market goes higher. So altcoins should outperform in the next phase once we get out of this corrective phase. Okay, let's look at these corrective phases. If you guys have got this far and followed me, we've gone through 1, 2, 3, 4, 5, 6, 7 20% plus pullbacks. And you can't remember those. You might remember the last summer one because that was pretty miserable, but that's it. We deal with this. The volatility is a feature, not a bug. You need the volatility to drive these massive rips when they come. So that's where we are. We've seen this. We should be somewhere close to bottoming. Now, with those 7 pullbacks, we've still had 600% returns from the low. Again, you've forgotten about those because you're like, oh my God, it got to 110 and now it's at 80. It's like, it's all fucking noise, kids. Really, honestly. When we go back to 2017, it was more violent because Bitcoin was earlier in its adoption phase and we had 1, 2, 3, 4, 5 30% plus pullbacks, some of them at 40%. So this is more like Solana now, which is more volatile because it's earlier in the cycle. It's more like Ethereum, it's more like others. So this gives you the contextualization of what you're going to have to stomach to make the money. To unfuck your future, you're going to have to learn to deal with volatility. And if you've got any spare income and you can invest, you can buy some of these dips, but be careful later in the cycle. You don't want to overextend when you should be thinking about how do I take money off. But we're far too early for that yet. I talked about we could take lifestyle chips off sometime in the first quarter. Looks like it's pushed out to the second quarter. I'll keep you updated when that happens. But again, I'm very chill about this. When you zoom out, Bitcoin is just retesting where it broke out from. That's it, guys. It's hardly a big deal. When we look at the RSI of Bitcoin, it's like the second most oversold it's been in this entire cycle. These are opportunities. When it gets this oversold, yes, it can chop around a bit at those lows, might even make a new low, might chop, rally, new low, which will then diverge on the RSI. But it's telling you 1 month from now, prices will start climbing for sure. They'll be higher than here. And then 2 months, 3 months, 4 months, we should have much higher prices. So once we've got the corrections out of the way, you start to look forward to, okay, now I can get some real price action going again. So when I put my DMARC indicators on top, which are my favored technical analysis indicators, we're at day 6 of a 9 count. So it tells us probably in the next 3 days, this will all be done. Is the low in already? I think it probably is. But could we kind of bounce, have another stab at the low, whatever? Day 9, that would be fine. For the NASDAQ, because it's not open on weekends, it looks like it's kind of Wednesday that it does it. Almost everything has the same set of indicators right now. So it's because it's all driven by the same thing. So it tells us that all of this stuff that's making everybody nervous should be over by the by the middle of next week. And then we can go to the healing phase. And then again, we can start rising. The healing phase, who knows? Could be 2 weeks, could be a month. But the back end of March, we should start to see prices accelerate. And then April, May, June, we should see some really significant price action as the second phase of the banana zone kicks in.
Raoul Pal's analysis makes one thing clear. Global liquidity remains the dominant factor driving Bitcoin and the crypto market. His M2 money supply model has accurately predicted Bitcoin's past movements, and based on his latest insights, this bull run is far from over. While short-term dips may shake out nervous traders, the larger economic trends still point to higher prices ahead. The data supports this outlook. Every major bull cycle has seen corrections, and historically, these pullbacks have created opportunities for investors with a long-term perspective. Pal believes the worst of this recent dip is behind us, and if his projections hold, the next few weeks and months could bring a strong recovery and new all-time highs for Bitcoin and altcoins. If this volatility has caused you to second-guess the market, now is the time to step back and examine the bigger picture. The smart money isn't panicking, they're positioning themselves for what's next. With global liquidity increasing, institutions continuing to enter the market, and historical patterns playing out as expected, all signs point to a bull market with plenty of room to grow.